What happens if you default on a hard money loan? This is a nightmare scenario that nobody wants to talk about. But if you're using a hard money loan, you need to know what's going to happen if you don't pay. Defaulting on a hard money loan is not just expensive. It could cost you the property, your credit, and your reputation. In this video, I'm going to explain exactly what will happen if you default and how to prevent it from happening in the first place. By the end of this video, you're going to understand the real consequences of defaulting and the steps smart investors take to avoid it ever getting to that point. Okay, so when it comes to hard money lending, what does default look like? Have you ever seen Goodfellas where they burn the restaurant down and kill? Okay, that's not going to really happen to you, so don't get scared about that. So I want you to know right out of the gates, it's not like that. It's a business transaction. In most cases, the ones I've ever seen. And a lender is just that. They lend money and they want to get paid back. They don't want to own your property. But what does default mean? Well, default means you stop making the monthly interest payments that are required on that loan. And you've ghosted them. When you stop communicating, that is a kiss of death to a hard money lender. Of course, not making payments is just as important. Let's talk about late fees, penalties, and foreclosure timelines. Let's hope you don't get that far. Number one, of course, they can charge late fees if you're missing payments. Those late payments can be a percentage of the payment, or they can be a flat fee, but rest assured, they will not be cheap. And the longer you go, the worse it will get for you. Usually, if you ignore a lender, they can usually start to foreclose within 90 days if you have not made the payment on the property. Depending on your contract, they can also charge additional interest on that loan if you default, or the interest rate could move to a much higher interest rate because you've defaulted on making your regular monthly payments. Now, if you are not making the payments or you're not communicating with them and they are forced to foreclose, and mind you, you would be forcing them to foreclose if you don't talk to them. It will not be good for you. Not only will they come after that property, but you very well may have tied up some other assets or properties or savings, whole life insurance policy loans, or something like that, that they can come after as additional assets to secure the losses they're going to have on the property. The length of time for them to foreclose depends state to state. If you live in a non-judicial state, meaning they don't have to go through the court process, you could be out of that property in 3 months. If you live in a judicial state, well, that could take anywhere from 6 months to a year or more. But I promise you, the longer that you ignore it and the longer that you piss them off, the more they're going to get out of you in the end, one way or the other. And your reputation will be tarnished forever, and you will not be able to be a real estate investor because that'll always be on your record. Let's talk about personal guarantees and your personal credit. As a real estate investor, if you're serious about building a long-term portfolio with rental properties, your personal credit is paramount to being successful as a real estate investor. So, the great news is, if you borrow money from a hard money lender or a private lender, they don't report those payments on your personal credit report because usually it's done in your corporate or your LLC name. You just personally guarantee it, but it's not listed on your credit for the public or the world to see. That's a great thing. If you default, that's a whole different ball of wax. Any defaults, any foreclosures, any judgments, that will go on your personal credit. And that will tarnish you for many, many years to come and slow down your progress significantly. And you don't want that to happen. So my advice is, if you're having problems on your flip, get a hold of your lender right away and communicate with them so they know what's happening and can try and help you out of the situation or make introductions, help you with better contractors or whatever it takes to get you out of that difficult situation, because they are not in the business of wanting to own houses, but make no mistake about it. If you don't pay them, they will. So you might say, well, how would I renegotiate this? Or how would I exit early? A couple different options. One, like I've been saying, is talk to them. Ask if you could extend terms. Ask if you could pause payments for the next 60 days or 90 days so you can get back on your feet. But go to them with a plan. Here's my plan. I'm behind on the renovation because this contractor left me, and don't use a lot of the blame game, but just say, listen, I made a mistake here. I should have fired this guy early. I didn't, and here's my situation. Or I stumbled onto an old septic tank and I wasn't expecting that $5,000 repair. I've got to find that money to get this done. Could you help me out with that maybe? And they may even loan you some more money to get out of a tough situation. I've seen it where they've even paid the contractor direct to finish the house and partner with you to help finish the house. Remember, they don't want to own the property. They want to help you get out of it. Now, it's not going to be a great situation for them, but it's better than going through the foreclosure process. If the house is almost done, do everything in your power to get the house finished, even if you have to go out and borrow private money from somebody close to you or someone that you know, and raise that money, finish the house, and then either get it sold, or you can also do a cash out refinance with a local bank. If the house is worth money and you have a lot of profit in there, remember, that hard money lender is in first position, so they will get their money if you do a cash out refinance, provided that you still have a profit on the property. So in other words, if you owe the hard money lender $80,000 on a total loan and the house is worth $120,000, the bank might give you $100,000 in that loan, or 80% LTV loan to value. You could use that money to pay off the hard money lender. However, if you owe the hard money lender $100,000 and your property is worth $100,000, even a cash out refinance is not going to help. You might be able to go to the hard money lender and say, here's the situation. If you let me do a cash out refinance or sell it at a discount, I'm still going to owe you $20,000. How can we work that out instead of me being stuck on the hook for the entire thing? These relationships, especially when you're starting out, can bring you complete freedom in your business. So treat these relationships like gold, because the truth is they are the gold in your business, especially when you're first getting started. Reputation's everything, your word is everything, and your credit is even more important as a real estate investor. The best way to avoid a default in the first place is to make sure you're taking out loans on the right property. I've put together a training here for you right now. You can click the link right here in the bio, and it's on how to define your buy box. Your buy box is the best property that you should be buying for the highest profit in the quickest amount of time with the least amount of risk for you. Go check out my training and learn exactly how to buy the right property so you don't find yourself in a tough situation.